Podcast Network Asia. FirstMetroSec is providing this podcast as a general market commentary. Reference to any specific security, product, or entity do not constitute as an offer or a solicitation of an offer to buy or sell any financial instruments or to participate in any particular trading strategy. The statements, comments, views, or opinions expressed by the hosts are subject to change without notice, and FirstMetroSec is under no obligation to update, amend, change, or correct any of the statements, comments, views, or opinions expressed. The statements, comments, views, and opinions expressed by the guests are their own and do not necessarily reflect the view of FirstMetroSec. FirstMetroSec disclaims any liability arising from reliance on or reference to any information obtained in this podcast.
You are listening to First Metro Securities Philippine Stock Market Weekly podcast, where we feature timely and relevant discussions on the Philippine stock market and the economy in the hope of providing you investing and trading guidance. Here's your host, Royce Aguilar from the Research Department at FirstMetroSec.
You are listening to Philippine Stock Market Weekly's Market Bites, our mini-series which strives to deliver trading and investing analysis built on our research reports. For in-depth information, you may also log in to your FirstMetroSec account and head to the Research tab.
Hi everyone, I'm Joan and I cover the consumer sector for First Metro Securities Research. In this episode, let me share with you our latest updates for Jollibee Foods Corporation, where we reiterated our buy call for the counter and raised our target price to 275 pesos from 260 pesos previously. In our update, we trimmed earnings forecast marginally by 3% for 2023, mainly to reflect the drag from higher interest rates. But still, we look past the negative impact of interest rates on earnings and shift our view towards JFC's core operations, where we see a lot of positives. Aside from the mid-teen system-wide sales growth, we also expect margins to continue to improve despite rising OPEX and catch-up of A&P, advertising and promotions given the better store economics in favor of more franchisees. This is a welcome shift in the store expansion strategy prior to the pandemic. Recall that in our previous report in May 2019, we highlighted that the 51-49 split between company-owned and franchise stores was not conducive for margins to expand. At present, 57% of JFC's overall global stores is now currently franchised. Locally in the Philippines, 67% of the stores are franchised. Then for the international business, 48% are franchised. And then aside from that too, we expect better than expected gross margins as raw materials prices have come off, and there's also scale effects from volume buying negotiations. And then 3, gains from business transformation program, leaner cost structures, and improved scale efficiencies should offset cost pressures from rising wages and other OPEX. At the same time, the turnaround of Smash Burger and Coffee Bean and Tea Leaf, CBTL, should provide a clear pathway to profitability. Lastly, we expect strong free cash flow generation to offset debt burden. In particular, we anticipate JFC to deliver positive free cash flow by next year, with robust operating cash flows expected to come in at 28.3 billion pesos for 2023 this year and 30.2 billion for 2024 next year. And also with the capex to normalize towards the tail end of JFC's business transformation and store network reacceleration programs. In the medium term, we forecast sustained positive free cash flow generation will pave the way for JFC to reduce its debt burden or redeem preferred shares and or senior perpetual securities. So overall, we are reiterating our buy call on JFC with the target price raised to 275 pesos. Trading at 30.6 forward 2023 EPS, valuations are not excessive in light of our projected EPS growth at 29% CAGR for 2022 to 2024. Our DCF valuation assumes a WACC of 8.3% and 3% long-term growth. The implied PE is at 35.5 times EPS for 2023 and 29.8 times EPS for 2024, which is just within pre-COVID valuations and undemanding in the context of EBIT rising above 1.3 times pre-Smashburger consolidation in 2018. This will be driven by recovering top-line performance as well as by gains from its all-encompassing business restructuring program. We expect these positive developments on the counter to support valuations and sustain positive share price action in the next 12 months. So, that's it for our JFC company update. Thank you.
Thanks for listening to First Metro Securities Philippine Stock Market Weekly podcast. Don't forget to follow us to get first dibs on our new episodes. For more up-to-date market news and info, exclusive content, and the opportunity to connect with your fellow Filipino investors and traders, join facebook.com/groups/FirstMetroSec and be part of the First MetroSec family.
The views and opinions expressed by the podcast creators, hosts, and guests do not necessarily reflect the official policy and position of Podcast Network Asia, the hosts of the program, or other programs of the network. Any content provided by the people on the podcast are of their own opinion and are not intended to malign any religion, ethnic group, club, organization, company, individual, or anyone or anything.